A photographer in Colorado ran her business from home for 4 years. She stored her camera equipment in her spare bedroom. Her editing setup. Her client files. Everything. One night her basement flooded. It destroyed $18,000 worth of camera gear and her entire computer setup. She called her homeowner's insurance the next morning, completely confident she was covered. The claim was denied. Fully. The adjuster told her that because the equipment was used for a business, even part-time, even from home, it fell outside the scope of her homeowner's policy. Her policy had a business property exclusion clause. A clause buried on page 34 of her policy document that she had never read. If you run any kind of business from your home, full-time, part-time, side hustle, anything, your homeowner's insurance almost certainly has a clause that voids coverage the moment business activity is involved. And almost nobody knows this until it's too late. This video covers exactly what home-based business insurance is, what your homeowner's policy secretly excludes, and the 3 ways to fix the gap depending on your situation and budget. Let's get into it. This is video 4 in our business insurance series. We've covered freelancers, LLCs, and e-commerce sellers, all linked in the description if you need to catch up. This one is for anyone running a business from home, which after the pandemic means tens of millions of people who may have a coverage gap they have no idea about. Not insurance advice, not legal advice, just clear research broken down simply. Stay to the end because I'm going to give you 3 specific options based on your budget and tell you which one fits which situation. Let's start with what your homeowner's or renter's insurance policy actually says about business activity, because most people have never looked at this section. Standard homeowners policies, the ones sold by State Farm, Allstate, Farmers, and most major insurers, contain a business exclusion clause. The exact wording varies by provider, but the meaning is consistent. If property is lost, damaged, or destroyed while being used for business purposes, the claim can be denied. This applies to equipment. It applies to inventory stored at home. It applies to client injuries that happen at your home office. And in many cases it applies even if you only use that equipment part-time for business. The threshold isn't full-time business use. It's any business use. There's also a liability gap that's less talked about but equally dangerous. Standard homeowners liability covers personal incidents. A guest slips on your icy driveway. But the moment a client visits your home for a business reason and gets injured, many policies classify that as a business liability event and exclude it entirely. And here's the part that genuinely surprises most people. This exclusion often applies to renters too. If you're renting your apartment and running a business from it, your renter's insurance has the same gap. This isn't just a homeowner problem. So the question isn't whether your homeowner's or renter's policy has this gap. It almost certainly does. The question is which of the 3 solutions fits your situation, and that's what the rest of this video covers. There are 3 ways to close the home business coverage gap. They range from cheap and simple to comprehensive and slightly more involved. Option 1. The home business endorsement. This is the simplest and cheapest fix. An endorsement is an add-on to your existing homeowner's or renter's policy. You call your current insurer, ask to add a home business endorsement, and they extend your existing coverage to include basic business property and some liability protection. Cost, usually $25 to $75 per year. Yes, per year, not per month. It is the cheapest insurance add-on in this entire series. The limitation is coverage limits, typically $2,500 to $5,000 for business property and limited liability. For a small side hustle with minimal equipment, this is often enough. For a growing business with significant equipment or client interaction, you'll need more. Option 2. In-home business insurance. a standalone policy specifically designed for home-based businesses. Broader coverage than an endorsement, typically $10,000 to $15,000 in business property and up to $300,000 in liability. It also covers loss of income if your home becomes temporarily uninhabitable, meaning your business income doesn't stop just because your house has a problem. Cost: roughly $250 to $500 per year. That's $20 to $40 per month. Available through Nationwide, State Farm, and specialty providers. Right choice for any legitimate home-based business with regular client interaction or equipment worth more than a few $1,000s. Option 3, a full business owner's policy, or BOP. We covered the BOP in the LLC video and the e-commerce video. 4 home-based businesses that have grown beyond a side hustle. Consistent revenue, visiting clients, contractors working for you, significant equipment or inventory, the BOP is the right answer. It bundles general liability, commercial property, and business income insurance into one policy. Cost: $500 to $1,200 per year for most home-based small businesses. That's $40 to $100 per month. Next Insurance and Hiscox both cover this. Links in the description. Here is how to choose between all 3. Under $500 per month in revenue and minimal equipment, endorsement. Between $500 and $2,000 per month, in-home business policy. Over $2,000 per month or any significant client interaction, full BOP. Simple as that. Here's something nobody mentions when they talk about home business insurance, and it changes the math completely. Business insurance premiums are tax deductible as a business expense in the United States. Every dollar you spend on a home business endorsement, in-home policy, or BOP reduces your taxable business income by that same dollar. Depending on your bracket, the real after-tax cost of your insurance is 20 to 35% lower than the sticker price. That $500 per year in-home policy? After deductions, it may effectively cost $325 to $400. The $1,200 BOP? Realistically $780 to $960 after tax savings. The $50 endorsement costs you almost nothing after deductions. Always deduct your business insurance premiums. It falls under Schedule C business expenses. This is money the IRS is giving back to you for protecting your business. Don't leave it on the table. Step 1. Find your current policy and look for the business exclusion clause. Call your insurer and ask specifically, does my current policy exclude business property or business liability? Get the answer in writing. Step 2. Assess your situation against the 3 options. Under $500 per month, endorsement. $500 to $2,000 per month, in-home policy. Over $2,000 per month, BO. Step 3. Get a quote this week. Not next month. The gap exists today. The endorsement takes a 5-minute phone call. The in-home policy and BOP take 10 minutes online through Next Insurance or Hiscox. Links in the description. Step 4. Note the premium in your business expenses file immediately. From the moment your policy starts, that premium is a deductible business expense. Tell your accountant. Let's close with the essentials. 1. Your homeowner's or renter's insurance almost certainly has a business exclusion clause. Check your policy this week. 2. 3 options to fix it. Endorsement for under $500 per month. In-home policy up to $2,000 per month. Full BOP beyond that. 3. All of it is tax deductible. The real cost is 20 to 35% lower after deductions. That's 4 videos in this series now. We've covered freelancers, LLCs, e-commerce sellers, and home-based businesses. If you've watched all four, you now understand business insurance better than most small business owners in the country. That knowledge is genuinely worth money. Next week I'm covering the one insurance type growing fastest right now, cyber liability. If your business touches any customer data at all, emails, payment info, client files, you are a target. Small businesses are the #1 victim of cyber attacks precisely because they're assumed to have no protection. That video drops next week. Subscribe so you don't miss it, and as always, don't be most people.